Hi everyone and welcome to my channel. I'm an European investor based in Germany, and today I would like to talk to you why is it important to investing and why you should start investing. As many of you know, if you clicked in this video, you're already familiar somehow with this world of investing, independently of the fact that you live in the US or in Europe or in Asia. And probably you are interested about this world and how, especially this year, it affected many people. But you don't know how to start, and you don't know if you should start. I mean, long story short is that independently of what happens every year in the market, or especially considering what happened this year, the best day, the best moment for starting investing was yesterday, and the next best moment is today. So I will go through why the reasons of why you should start investing in 2021 as the year is coming. I will explain what brought me to investing and how I built my current portfolio, the holdings that I have, the strategy, and also this beautiful dashboard that I created to keep up my current performance. So let's get back to it then, and let's start with why I started investing. Maybe this is something insightful that could help you take a decision into it. So for me, everything started 3 years ago during the last Bitcoin bubble. So at that time, it was we were here in this big candle area, and the Bitcoin was going crazy, was going mainstream, was in the news everywhere, everybody was talking about it, everybody was FOMOing, and I was pretty much I didn't know anything about any type of investment, any type of Bitcoin. I knew Bitcoin since 2009 when it started, when Satoshi created the white paper, but I never really understood it, and I never really understand its potential. So as an engineer, I could have tried to mine some Bitcoin at the time, but for me it was too abstract. I had other priorities in my life. Then what happened is that during this month, September, October and November till mid-December, Bitcoin kept pumping, and the pumps were getting higher and higher and higher, until the point that even for me, even a guy like me that usually very conservative, started to FOMO. And I looked into opportunities to invest in Bitcoin, but just reading about it, because the whole world for me of investing was very scary. And then what happened, as we should have happened anyway, the bubble burst and Bitcoin went crashing directly until 3K. So during this period, this long year of 2018, while Bitcoin sits for basically the whole year at 6K, I started reading more and more about investing. And while I was very much immature about it, because I said like I would never invest in something like Bitcoin because it's going so bad, I didn't understand at that time anything about what a bear market, bull market, cycles, or this kind of graph with candles and averages meant. So my goal was just to learn more and more about investing, and then probably in the future starting getting close to this world. The thing that then convinced me really to take the first step was when I, looking at YouTube videos and reading more articles, I came across this chart. Not this one, sorry. This graph here, basically. So this is the value of the dollar. It is dollar, but basically it's a concept that is related to also other currencies. Since the Fed was created until 2019. So as you can see, this is something probably familiar to you as well. The purchasing power of every dollar went down drastically since the inception of the Fed till now. So if you had $100 in 1913, the value of $100 now would be basically around $3. So your purchasing power, you would have always a bill of $100. That it's not something that your paper gets cut, but the purchasing power of your $100 would be would have lost basically 97% of its purchasing power up to $3. So with what you could have bought with $100 in 1913, now you can buy only for $3. So your purchasing power dropped dramatically. And if you look closely to this chart, we can see that actually the biggest incentive to this burst happened in 1973. Because from 1913 and 1973, 60 years of inflation, with 60 years of inflation, the dollar lost around, here we are at 28, we lost around 62% of its value. But in 1973, Nixon decided to remove the gold standard. So until that point, every dollar was backed by gold. So every dollar that was created needed to be backed by a dollar of gold. And this, since gold is a finite supply, this would have reduced significant inflation and would have controlled the amount of dollar that could have been emitted by the Fed. But when Nixon removed this gold standard, it allows the Fed to print as much money as they wanted because there was no backing system behind. So now you could have printed as many dollars as you want, no problem. And what happened is from 1973, the dollar went from 28 till $3. This is more than 90% drop in the span of less than 50 years. So you can see that this brought an acceleration that is currently even trading lower because we are in 2020, and in 2020 alone were printed 20% of all US dollars. So I believe that this chart extended would mean that now $100 will be bought around $2 maybe, so they would be even lower. So when you look at this chart, if you had invested your money, if you had money in the bank in 1973, they would have been worth 90% less now. If you had $100,000 or 100,000 euro, because not euro, sorry, currency at the time in your country. Since most of the major countries trade with the dollar, because it's the most powerful currency in the world, basically every country keeps its own debt in dollars, you would have lost 90% of your purchasing value. It doesn't matter if you had the Italian lira, the Turkish lira, the German mark, it would have lost 90% of its value, minimum. And it made me think so I always had this thing from my parents that saving as much money as possible was the best strategy to have a brighter future. So that when you will be 60, 65, it's time to get to leave your job and enjoy your pension, you would have that kind of cushion behind in case of emergency or anyway to enjoy the rest of your life. But it is actually like that? I don't think so. I don't think so anymore because first of all, we know that pension system is something that will not hold for very long. And secondly, if I keep saving money for the next 30 years, they will keep losing value until the point that what I really saved, it's not really enough for maybe a span of 5 to 10 years, depending on my expenses. So does it really make sense, this? And then I looked at another chart, which is this one. This is the S&P 500 return from 1950 till January of 2019. Now, I didn't know much about the S&P 500, I didn't know much about investing. I just saw that this chart and this chart are basically opposite. You could overlap them here and you would see, from 1950 of course, and you would see a complete different picture. I remember the dot-com bubble, I remember the financial crisis, I was in school, but I always thought that these were I don't know, was not something that would have interested at that time. But after the Bitcoin bubble, at this kind of study that I did behind, I started to get more and more interested in this world. And if you had invested $100 in the S&P 500 in the 1950, or better, if you had $100 in the 1950, now you would have basically something like $3.87 in 2019. But if you had $100 in 1950 invested in the S&P 500 and not in your bank, if you use the compound annual growth rate formula to calculate your final value, so the compound annual growth rate is the annual growth rate of your investment every year. And for the S&P 500, we know it's 9.8%. So if you had this 9.8% constantly every year, and you had a beginning investment of $100, you would have, after 70 years, because remember this was in the 1950s, you would have $65,000. This is an astonishing return in your investment with $100, which was not actually a little amount of money in the 50s. I believe that was kind of a salary at the time, but in the next 70 years, this would have been like a huge inheritance for your grandparents, basically, grandkids, or anyway for your kids. And we are just looking at 2020, but already in the year 2000, your return would have been massive. So looking into this and into inflation and having still this kind of FOMO in my head with the Bitcoin bubble, I said, why not starting investing? Why not getting close to this war and starting approaching this war with caution? Yes, always caution. So this is all for part 1, and we will continue in the next video with how I started investing. Thanks for watching. See you soon, guys.